Ever glance at the market news
Yeah.
and see something like F&O ban and just kind of wonder what that's about?
Oh, absolutely. It sounds quite technical, doesn't it?
Yeah, like some secret code.
Think of it like this. An F&O ban on the NSE, that's the National Stock Exchange in India, it's basically a temporary pause, like hitting hold on new futures and options for a specific stock.
Futures and options,
Yeah.
right? Those are the bets on where a stock price might go.
Exactly. That's on future prices. And sometimes, well, too much betting can make things a bit volatile.
Unpredictable.
Yeah.
So in this deep dive, we're going to unpack this F&O ban thing
Figure out why it happens, what it means.
and maybe what you can learn from it without getting bogged down in, jargon.
We've looked at some guides, like Miss Mancy's class, which breaks it down nicely for beginners, and also some NSE examples on market-wide position limits.
So our mission today, understand these bans simply and pull out some useful nuggets for navigating the market.
Okay, so let's say a stock gets hit with this ban. What actually, happens? What does a trader see?
Good question. So the main thing is no new F&O trades. You can't open any new positions.
Right. But what if you already have a position?
Well, you can still close those out. You're not stuck forever. You just can't add more.
Okay, so squaring off is allowed.
Exactly. And importantly, this only affects the F&O market,
Meaning,
meaning you can still buy and sell the actual shares of the company, in the regular cash market.
yeah,
That keeps trading normally.
got it. So the underlying stock isn't frozen. How long do these bans usually last?
Typically, they're pretty short, often just one trading day.
Just a day.
Yeah, but they can be extended if whatever caused the high activity is still going on.
Okay. So what actually triggers this? What puts a stock in the penalty box?
It all comes down to something called open interest.
Open interest. That's the total number of F&O contracts that are still open, right? Not yet settled.
Precisely. When that total open interest crosses 95% of a limit called the market-wide position limit, or
Yeah.
MWTL, bam, ban triggered.
95% MWPL. And how does it get out of the ban?
The open interest needs to drop back down, specifically below 80% of that same MWPL.
Okay, 95% in, below 80% out. So this MWPL is the key number. What exactly is it? Sounds like a kind of cap.
It is. Think of it as the maximum allowed F&O contracts for that stock. The NSE sets it to basically prevent too much speculative buildup, a safety cap.
Makes sense. How do they calculate that cap, the MWPL?
It's based on the company's shares, specifically 20% of the free float shares.
Free float. That's the shares available to the public, not the ones held by promoters or insiders.
Exactly. Total shares minus promoter holdings.
Okay, maybe an example would help.
Yeah, let's use a fictional one, say ABC Limited.
All right, ABC Ltd.
Let's say it has 100 million shares total, and the promoters hold 60 million.
Okay, so the free float is 40 million shares.
Right. So the MWPL would be 20% of that 40 million.
Which is 8 million. 8 million contracts is the limit.
Perfect. So the ban trigger, that 95% mark, would be 7.6 million open contracts.
And the exit below 80% would be under 6.4 million contracts.
Exactly. So you can see how the number of publicly available shares directly sets this limit.
That clarifies the how. But why does the NSE do this? What's the goal?
Well, the main reasons are, first, to curb really wild price swings, prevent excessive volatility.
Okay, stability.
Second, to discourage potential manipulation. If someone tries to corner the F&O market, this limit makes it harder.
Right. And third?
And third, it's sort of a protection for smaller retail traders.
Yeah.
They can get hurt badly by sudden huge price moves driven by F&O speculation. This acts as a bit of a buffer.
Like speed bumps on a road, maybe? Slow things down before they get out of hand?
That's a good way to put it.
Have there been some real examples recently?
Oh, yeah. Happens quite often.
Yeah.
Vodafone Idea back in 2021 got banned. There was a lot of F&O action around news about its debt restructuring.
And did it last long?
No, that one lifted pretty quick
There you
the
go.
next day, I think, as the open interest came down.
Okay,
More recent ones?
sure. Just looking back at April 7th, 2025, Hindustan Copper was on the ban list. And Burlesoft, too, actually. Hindustan Copper?
Yeah.
What happened there?
Its open interest apparently shot up to like 115% of its MWPL. There was quite a bit of price movement in the stock itself around that time, too.
Wow, 115%. So same rules applied, no new F&O, cash market, okay.
Yep, same deal. New F&O stopped. Existing ones could be closed, cash market unaffected. It would lift once OI dropped below 80%.
Any others?
Indus Bank also had a ban period around March 12, 2025. Open interest hit something like 148% of MWPL Huge.
148%. What was driving that?
Likely heavy trading linked to maybe broader banking sector news or sentiment at the time. Again, the ban restricts new F&O, lets things cool off.
So these examples show it's often tied to news or strong price moves.
Definitely. Which brings us to what can you, the listener, sort of infer when you see a stock hit the F&O ban list?
Well, the first thing is clearly high speculative interest, right? A lot of betting happening.
Yes. And often, like we saw, linked to specific news or events. So it signals something is up with that stock. Could be good news, could be bad news, but something's driving heavy F&O trading.
Which usually means caution, potential for volatility.
Exactly. High F&O activity can mean bigger, faster price swings. So seeing a ban might be a signal to be a bit more careful, especially in the short term.
What about the price itself during the ban? Does it tend to go up or down?
It's tricky. Some traders might be forced to close positions, which could push the price down. Others might see it differently.
Right, depends on whether people are closing long or short positions.
And maybe the underlying strength of the company matters too. Like a fundamentally strong stock like Indusen Bank might stabilize or recover quicker after the F&O frenzy calms down.
Whereas a weaker one might stay volatile or drift lower.
Plausible. And when a stock exits the ban, what does that signal?
Well, it suggests the extreme speculative frenzy has cooled off, right? The open interest is back below 80%.
So maybe things are stabilizing. Could potentially be a safer time to consider trading if you were interested, especially if it's a solid company.
And crucially, don't try to open new F&O trades during the ban, right? There are penalties.
Oh, absolutely. You can get fined. Something like 5,000 or 1% of the trade value, whichever is higher per trade. Definitely not worth trying to sneak one in.
Ouch. Okay, so for beginners trying to make sense of this, any simple tips?
Yeah, a few things. First, just be aware. Check the NSE's daily ban list. It's published every day.
See which stocks are currently restricted.
Right. Second, remember if a stock you follow is banned, you can still trade the shares in the cash market if you want. The ban is only on F&O.
Good reminder. What else?
Keep an eye on the news around stocks with high F&O activity. What's driving it? Earnings, mergers, sector news. Understanding the why helps.
Context matters.
And always be cautious with F&O generally. The leverage involved means things can move very quickly, for or against you.
Sound advice. Anything else on the NSE side?
Yeah, the NSE actually issues alerts when open interest in a stock crosses certain thresholds, like 60%, 80%, 90% of MWPL. Paying attention to those could give you a heads up that a ban might be coming.
So you can maybe avoid initiating new F&O positions if it's getting close to that 95% trigger zone.
Exactly. Proactive awareness.
Okay, so let's kind of wrap this up. The main takeaway seems to be that an F&O ban is a clear signal.
Right. A signal of intense trading interest, usually derivatives focused, often sparked by some news or event.
And understanding that signal can give you insight into market sentiment for that stock, potential volatility, and associated risks.
And crucially, it's an F&O specific thing. The cash market, the actual shares, keep trading.
So here's a thought to leave you with. Even if you never plan to trade futures or options yourself, how could tracking these F&O ban lists and the news behind them become just another layer of information you use, another piece of the puzzle in understanding why markets are moving the way they are?
That's interesting. Thinking about what other maybe seemingly restrictive market rules or mechanisms might actually hold hidden clues about sentiment or risk if we just understood them better.
Exactly. What else out there is signaling something important if we only knew how to read it? Food for thought.